Ladies and gentlemen, today we are talking about three controversial topics that spark strong emotions. The idea that Poland will be rich as the UK within 5 years. Second, the belief that Bitcoin is a reliable store of value like gold. Third, the claim that people are leaving the UK in large numbers because Europe pays more, and that even Britons are losing faith in their own currency, British pound. This is not about attracting any country or any group of people, it's about economic reality versus political slogans and financial hype. Let's start with the first topic. Topic 1. Poland will be as rich as the UK in 5 years. Well, you sometimes hear that claim that Poland will reach British living standards within 5 years. It sounds optimistic, it sounds motivational, but when we look at wage data, the picture becomes more complicated. Right now, minimum wage in Poland are still significantly lower than in the UK. On average, Polish minimum wage are roughly 2.4 times lower than British minimum wage when converted directly. Now, here's the key issue: growth rates. Yes, Poland has experienced strong wage growth in recent years, even 9.4% in 18 years. But 20 years ago, wages were very low and increased from that minimum very fast, but now are quite higher and the rise is slower. But the UK has also increased its minimum wage steadily, and this year the rise was higher than in Poland. If both countries continue raising minimum wage at comparable percentage rate, the gap doesn't magically disappear, the ratio remains similar. For example, if a country A earns 2.4 times more than country B and both increase wage by say 8% annually, the proportional difference stays roughly the same. The number rises, but the gap remains. So, when politicians or commentators say, in 5 years Poland will be as rich as Britain, we have to ask, based on what mechanism? Closing a structural income gap requires either dramatically higher productivity growth in Poland compared to the UK, or the crash and big crisis in the United Kingdom. The British pound would have to lose so much that even the older British don't remember. Major currency shifts. Yes, this is called major currency shifts. The PLN, Polish currency, must rise and the British currency must go down, or a significant slowdown in British wages. Without one of those factors, convergence takes decades, not 5 years. So this is a pure lie. It's also important to understand what rich actually means. Is it GDP per capita? Median wage? Purchasing power? Households' wealth? Public infrastructure? Countries don't become equally wealthy just because wage rise quickly for 5 years. Poland has made impressive progress over the past 2 decades. That's undeniable, but economic convergence between nations is usually slow and gradual. South Korea needed decades, Ireland needed decades, Spain needed decades. 5 years is politically convenient. Economically, it's unrealistic. Optimism is good, but pretending the structural gap disappears overnight can create false expectations, especially among young people planning their future. Now let's move to something even more controversial. Bitcoin. Topic 2. The Bitcoin illusion. Bitcoin has been described as digital gold, a hedge against inflation, a revolutionary asset, a store of value independent of governments. But here's the uncomfortable question. What is Bitcoin actually worth? Gold has intrinsic properties. It's used in electronics. It conducts electricity. It resists corrosion. It's used in aerospace, medicine, and microchips. Silver is even more industrially important. It's critical in solar panels and advanced electronics. Even if financial markets collapse tomorrow, gold and silver would still have industrial use. Bitcoin does not. Bitcoin is not backed by a government. It's not tied to tax revenues. It's not backed by a military, an economy, or industrial production. It produces no cash flow. It generates no dividends. It does not represent ownership in a productive enterprise. Its value comes from one thing: what someone else is willing to pay for it. Supporters argue that scarcity gives it value, but scarcity alone does not create value. There are many scarce things in the world that are worthless because they have no utility. The moment confidence disappears, the price can collapse because there is no floor based on industrial demand. When markets panic, gold and silver often hold because industries still need them. Central banks hold them. Governments recognize them. Bitcoin depends entirely on network belief. Now, that doesn't mean Bitcoin can't rise in price. It has before, but price appreciation does not equal intrinsic value. Another critical difference: in a severe crisis, you can't use Bitcoin to manufacturing chips, medical equipment, or energy system. Gold and silver are physical materials embedded in global production chains. Bitcoin is code, and code has value only as long as people collectively agree it does. Many retail investors entered the crypto market believing it was guaranteed to replace traditional finance. But finance is built on regulation, trust frameworks, legal system, and state enforcement mechanism. Bitcoin operates outside of that, which some see as a strength, but it's also a weakness. When exchange collapse, there is no deposit guarantee. When keys are lost, assets are gone. When sentiment shifts, prices crash. Calling Bitcoin digital gold sounds persuasive, but physically and economically it behaves very differently from gold. And that brings us to the final topic: currencies, migration, and confidence in the British economy and British pound itself. There is growing discussion about whether citizens from EU countries are leaving the UK and returning to Europe, or moving elsewhere, because earnings prospects have changed. After Brexit, migration patterns shifted, visa requirements changed, work regulations changed, the labour market tightening in some sectors. At the same time, certain EU countries have experienced wage growth and economic stabilization. For some workers, especially skilled professionals, opportunities inside the EU may now appear more attractive than before. The question isn't whether everyone is leaving. Clearly they aren't. The question is whether relative advantages have shifted. If real wages stagnate while living costs rise, mobility increases, people compare net income, housing costs, healthcare access, and long-term stability. Economic migration is rational. People go where opportunity is strongest. There is also discussion about currency confidence. The British pound remains one of the world's major currencies. It's backed by a large financial system and institutional credibility. However, in times of inflation or economic uncertainty, Individuals often look for alternative store of value, traditionally gold and silver. Throughout history, when people worry about currency purchasing power, they diversify. That doesn't necessarily mean collapse, it means hedging. If citizens convert saving into precious metals, it usually reflects precaution, not rebellion. It's important to separate sensational claims from measurable data. Currency markets fluctuate, capital flows shift, migration patterns evolve, but declaring that an entire population is abandoning its currency oversimplifies complex financial behavior. What we can say is that when people feel uncertain about economic direction, they diversify assets. When earning power shifts across border, migration adjusts. When expectation exceeds reality, frustrations grow. And that connects all three topics we discussed today. Well, but the reality is that British people exchange their British pound for a lot of gold and silver at the moment, as the gold price is skyrocketing. Whether it's promises of rapid nation wealth, hype around digital assets, or dramatic claims about mass migration, the common thread is expectation versus fundamentals. Economic reality moves slower than political slogans. Assets value depends on structure, not marketing. And confidence, whether in a country or currency, is built over decades, not headlines. The key is critical thinking. Ask, what is the mechanism? What is data? What assumptions are being made? What would need to happen for this prediction to come true? Optimism is good, innovation is good, but economic is governed by math, productivity and incentives, not wishful thinking. If you found this analysis useful, consider subscribing in this next video. We will break down another topic where perception and economic reality don't always match. Thank you for watching, and please watch this movie that is showing on the screen now.